Welcome back to Upside Down Data. We need to talk about Bitcoin and crypto in general. So as I'm sure you are all aware, the crypto markets got hit hard over the last few days. And the main catalyst for this, of course, was the tariffs that Trump was threatening to put on to Canada, Mexico, and also China. Now, for now, the Canadian and Mexican tariffs are on hold, but this really upset markets quite dramatically. So first, if we just look at altcoins, so this is others, so the total market cap of crypto assets, excluding the top 10 market cap assets. Look at the size of this wick. We shot down so quickly during the day back here on Monday, but then fortunately we were able to rebound. And really what drove this was a lot of liquidations. So if we just look over here, just looking at Bitcoin liquidations on this chart here over at Coinalyze, we can see massive liquidations happen. And across altcoins, this was just as bad, if not worse, which leads you to these big wicks. Basically, a lot of forced selling happens. And then, of course, when you have that happen, and in addition to news like delays of the tariffs on Canada and Mexico, that kind of contributes to getting this big wick that quickly gets bought back up to the upside. A lot of people lost money, then a lot of people made money kind of buying up that panic. But this is not a great thing to see. This never feels good, especially when you want to think that you're in a bull market. Because oftentimes what can happen with these capitulation wicks is that price kind of meanders down and fills out a lot of that wick before eventually going back to the upside. And this is another element of crypto that's in kind of a weird spot right now. We have all of this selling and pain happening due to tariffs and worries about trade wars and things like that. But then on the flip side, you have today at the press conference about digital assets, you have David Sachs coming out and saying that a golden age for crypto is coming. So you basically have signaling specific to crypto that's very bullish, but this much broader, more scary macro picture. And so far, the market has not just bitten on this and rallied like crazy. And part of that could be that this was priced in. This is very consistent with the messaging that we got all the way through the campaign, and then especially after the election, that this was going to be the disposition of the administration. Because no firm action has happened yet, it does not surprise me that things haven't moved. So if we now look at Bitcoin, so what I actually have here is this, you'll see this trend line, which has acted as a pretty important line in more recent history for crypto. And what I think would be concerning is if we actually had a daily close below this, and we're flirting with it very closely right now. We see that we just closed above it here. Now, obviously, it's just a trend line, and so you can't put all of your eggs in that one basket. But certainly, if we were to start breaking down below this, it would be a breaking of structure. It would be concerning, and might suggest that kind of at best, we could hope for something more like this, where we chop around in this range longer, maybe even have breakdowns below before being able to reverse the upside. But it would suggest that the tenor of the market is probably changing at that point. And you have to take more seriously these possibilities of lower prices coming into the horizon. So that's on a short-term, more technical perspective. One of the things I'm watching with Bitcoin, I think it's good news that so far we haven't broken below it, and that Bitcoin has remained up at least the high 90Ks, that we haven't already, we didn't close down here and just continue to tumble. And with altcoins, I really think here we're gonna have to see how it goes, but it's not looking especially pretty. Altcoins were already in a downtrend. This just might be accelerating it. And as I mentioned before, these wicks like to get filled. And so that's a concern, not just only for altcoins, frankly, but also for Bitcoin. If it wants to go and fill this wick, we're gonna break that trend line. We might have more worries to come. But obviously, you know me, these are not the considerations that I base my outlook on. I like to look at our data, our models that I think give a much clearer picture of what's going on and what we might expect. So let's go over and flip over to those and see what they're saying. But first, if you want to see live data from our models and more, you can go to our website, polaritydigital.io, link in the description. And if you sign up for our Polarity Digital Pro plan, you'll get live access to all of our models for Bitcoin and over 80 other altcoins. We also have a bunch of on-chain data there as well for Bitcoin and altcoins. So if you're interested, check it out, link in the description. So the first model I want to talk about is somewhat of our flagship model here. If you're familiar with the channel, you're familiar with this model. It's our upside downside potential indicator. We're looking at the long-term version of it right now. Here's what moves that play out over months to multiple months. Now, with this, you can see it does a very good job of identifying these really high risk points and these really low risk points that historically speaking have played out very well to be basically selling high risk and buying low risk. Now, with that actually played out, again, we got to pretty high risk levels as we went up to this local high back here in December. And now risk has been cooling off, but we haven't gotten back down to very deep levels yet. We haven't gotten down to the levels that we bottomed out in here in the middle of 2024, and certainly not anywhere close to these really low levels like in September 23 or all the way back here at the bottom of the bear market. So when you look at this, you always have to interpret risk based on the broader context. If you're at -1 risk in the middle of a raging bull market, that is a much better place to be and a much better acquisition period than if you might potentially, for example, be entering into a bear market. -1 risk does not look so great. So the question we have to ask ourselves is, where are we and what do broader events tell us about where we are in the market cycle? So one thing that I think is pretty clear, and what has happened, I think is just an inescapable reality, is that we're now in a situation where there's just more uncertainty. I think if there's one thing that everyone should have learned about Trump by now, it's that he is unpredictable. People will claim that they know what Trump's going to do. No one knows what Trump is going to do except Trump himself. And the problem with that is that markets hate uncertainty. They really don't like to not know what's going to happen because they don't know how to price in the future. The future is uncertain, and therefore taking risk is harder because you don't know if there's some tail risk that's going to materialize and blow things up. And certainly with this already happening in the Trump administration, we don't know if he will decide to do something else extreme tariffs or some other thing that could upset markets. And so that might put more of a roadblock for massive risk taking than might exist otherwise. So we'll see exactly how the market reacts to this, but I did just want to mention that that is one thing that I think we have to be mindful of as we navigate the market, that we're already getting to a point where things were more uncertain in the market. I've been talking about this entire time. Back here was the blindly buy Bitcoin phase. That's what I was saying this entire time. Then as we got through here, I said that now we were transitioning out of the early stages more to that difficult point, that harder point where you really have to be more discerning about what's going on and not just be blindly attached to some bias, like being blindly bullish like we were back here. Now you have to be more discerning. So am I throwing in the towel and saying the bull market's over? No. What I am saying, though, is that there are now notable tail risks that exist that are going to be very hard to predict, very hard to anticipate, and that we shouldn't just blindly hold on to some bias. So the bull market is still seemingly on, but that could change on a dime, and certainly the likelihood of that is increasing if extreme things happen, like, for example, more extreme trade policy or things like that could derail everything. And we have to be mindful of it. We have to be constantly testing our hypotheses and saying, does it make sense to still be bullish here or not? And that will change how you view risk. So if this was just a clear skies ahead, nothing to worry about situation, -1 risk would look pretty good right now. But in the current situation, I'm not so sure about that. I think we're more in a wait and see position right now with Bitcoin and how it behaves. And I'm personally fine waiting for more data before making a very strong decision one way or the other. So let's now talk about, is the data still suggesting we're in a bull market though? Because that's really the question. And so one of the ways that you can make that determination is on more news, macro, all that kind of stuff. But those are a bit wishy-washy. It's hard to really plant your flag somewhere too definitively from that perspective, in my opinion. I like to have more of a data-driven approach to it. So one of the things that we can look at for this is our market cycle model. Talked about this in the past. It's a model that's able to very quickly identify these transitions out of bull markets into bear markets and vice versa. And this was, again, I've talked about this many times. One of the reasons I got so bullish through here was because we flipped bullish on this model, and it remains bullish. It says basically nothing to worry about yet, and still giving Bitcoin a lot of room to work with. As long as you're above this blue line, it's saying that you're in a bull market. So far, so good. Really, as long as we stay above this level, I'm not going to be thinking that the bear market is necessarily on at this point. But that doesn't mean that we can't still have significant pain above this level. I mean, look at how far price is above that level right now. Plenty of pain can transpire while still being in a bull market. So in the short term, this doesn't mean that we, have to just hold this uptrend or even have to hold this range. We could actually see a lot of pain and have this model remain bullish, and then maybe we do continue up to the upside. We'll have to wait and see. So overall, I think suggesting that the bull market's still on makes sense, but to suggest that means that we can't have pain, at least in the short term, I don't think makes sense at all. And one of the things we can look at that actually also suggests that Bitcoin might still struggle a bit in at least the near term to do anything too impressive is how it's relating to its DXY based fair value. That's this red line here. This is another model I've talked about a lot, does a good job of giving you this idea of, based on the DXY, the strength of the dollar relative to other fiat currencies, it tells you a lot about where Bitcoin should be valued at. It actually does a very good job of identifying when it's really undervalued and leads to big parabolic runs, and also when it's really overvalued, which can lead to big corrections or collapses in price. And what you'll see is that right now we're actually at another situation where we are overvalued relative to the DXY base fair value. And this is not really surprising. If we just flip over and look at the DXY, it has been rallying ever since September of 24. And until it really reverses and moves back down aggressively to the downside, you're not going to see a lot of relief on the DXY base fair value, basically. This is something that's put pressure on that valuation, and that's what we're seeing. So we are slowly trending up, but you really need to see the dollar start to collapse here, or at least the DXY fall pretty aggressively, to see this really shoot up and get back up to price. Because really this can resolve in one of two ways. Price can come back down to fair value, and it's done that plenty of times in the past, or fair value can rise to meet price, which has happened before in the past as well. One of those two things can play out, or both. You might see price fall and fair value rise, meet, and that's when you move back up. That's actually what happened here. Price fell, DXY fair value rose here in 2024, and it wasn't until we got back to that point where we're actually undervalued, where then we started that trend up that led to the all-time highs, the new all-time highs up to where we are right now. So that's where another piece I'm going to look at. And eventually there could come a part in the cycle where we just basically can just rip off from the fair value and just go way higher and kind of put in a big top. That can totally happen. I don't think we're here yet. I don't think we're there yet. I think we still need to try to keep close to the fair value and then finally maybe go and put in a big parabolic move to set in whatever the top would be. But that's what I'm going to be watching for. And so that's the hope, right? That is the current thesis, that we still seem to be in a bull market, that we'd want to see just risk cool off more to set in some bottom to then move back to the upside, see fair value catch up with the price to be able to move us back up as well. But I think we just need to keep very close attention to what's going on in the broader markets. You know that I tend to not put too much stock in the news or following that. I tend to just follow the data, and that's what I'm still going to do. But there have been points in Bitcoin's history where paying attention to the news has been extremely important. And one of those points was right back here when the Fed said that they were going to start hiking interest rates. That really changed the tone of risk assets, and we know exactly what happened after that. It was a time when a lot of people were saying, well, ignore the news, who cares, news doesn't matter, we're in a bull market, we're going to 100K. Well, that did not work out very well. So if we were to find ourselves in a situation where the US suddenly is in a trade war with China, with Canada, with Mexico, with the EU, and massive tariffs are being levied with no end in sight, I'm not just going to sit here and say, the news doesn't matter, just totally ignore that, it's fine. I'm going to say pay attention, and then especially if you see the data start to line up with that concern, that's when it's time to really get worried. And that's really, in my opinion, what it means to be data-driven with markets. Constantly test your hypotheses, look at the data, do they still support it? And don't just totally ignore what else is going on in the world, but don't let it overwhelm your data-driven perspective either. The market will climb a wall of worry to some degree, but at some points, at certain pivotal moments in time, you will get developments in the broader world, which are just so massive that they just aren't going to be ignored by the market. And so that's where I think it's important to be nimble. So my base case remains that the cycle's not over. I do think that Bitcoin will put in new highs relative to where it has so far, but that is subject to the data. And if the data change, I will change that view. I'm not going to get married to it. I'm not going to act like that has to happen, because markets don't work that way. They react to the world. They react to what's happening. It's all probabilistic. It's all if then. It's not, this is programmed, we're going there, like a lot of people in crypto seem to think. So obviously none of this is financial advice. You should make of the data as you will. You should make of what's going on in the world as you will. Navigate the market as you see best. But that's the way that I'm currently thinking of it. I'm going to remain data-driven, remain data-dependent, but I'm not going to bury my head in the sand and ignore broader data, broader news, broader events. I'm going to keep those in mind as I interpret the data and then make my decisions from there. So if you like the content, remember to subscribe to the channel, give the video a like, and follow us over on X. A lot of updates of our models and more over there. And go to our website, polaritydigital.io, to see live data from our models and more.